Allow me to introduce Deputy Managing Director of the International Monetary Fund, Antoinette Monsio Sayeh. In response to the pandemic, the IMF has introduced new measures to aid countries during the crisis, providing emergency financing, grants for debt relief, policy advice, and enhancing liquidity. It is of great curiosity to us all to better understand what ought to be the policy priorities for countries and how they should be behaving, particularly low-income ones. Currently co-chair of the 19th replenishment of the International Development Association and distinguished visiting fellow at the Center for Global Development, with previous positions as Minister of Finance in post-conflict Liberia and 17 years spent in varying capacities at the World Bank, Mrs. Sayeh's career is an impressive one. In her time as director of the African Department, she was responsible for significantly enhancing the IMF's engagement with sub-Saharan African members. Given her position, there are few better equipped to comment on the global economic recovery and policy priorities which will need to be the center of governmental and institutional focus in the coming years. There will be no Slido for this session as Dr. Sayeh will be answering some pre-selected questions sent by our audience. Welcome, Dr. Sayeh, and we await your speech with enthusiasm.
Well, thank you very much. Thank you for that very kind introduction, and thank you for inviting me to this important summit. And good morning to many of you, and good afternoon to even more of you, I think. I'm really thrilled to be speaking with all of you today. So as we gather virtually, unfortunately, we cannot be together physically. It's almost a year on since the start of the pandemic. I'd very much like to share with you how we see the global economy and our outlook for it. I will also take the opportunity to talk about where we should be headed. That is our policy priorities for the period ahead. And in keeping with the young, optimistic energy that surrounds me virtually with all of you today, I will end with what the IMF believes is a once-in-a-generation opportunity that lies ahead of us. But let me begin first with COVID-19, the biggest, most immediate crisis of our lifetimes. While the global economy has started to climb back from the depths of the crisis, the recent resurgence in infections and spread of new variants is delaying our recovery. It is also a powerful reminder that we cannot achieve a sustainable recovery anywhere unless we defeat the pandemic everywhere. These exceptional times call for exceptional action, and over the last year, countries around the world have come together to undertake synchronized actions to cushion the blow. This includes $14 trillion in fiscal support to households and firms and $9 trillion in monetary support through interest rate cuts and other measures by central banks. These actions have helped to put a floor under the global economy, without which the economic impact of the pandemic could have been much greater. The IMF too has moved with unprecedented speed and magnitude. The fund was set up more than 75 years ago, precisely to help countries in such situations by fostering financial stability and monetary cooperation. And since the start of the pandemic, we have approved over $105 billion in total financing for 85 countries. We expanded concessional financing for low-income countries and provided immediate debt relief to 29 of the poorest, most vulnerable ones. We worked with the G20 on bilateral debt service relief and on a common framework to address unsustainable sovereign debt. And we provided real-time policy advice and capacity development support to over 175 countries. So never in the history of the IMF have we done so much and so fast. So what is the economic outlook? In our latest forecast released last week, we project global growth at 5.5% in 2021, which reflects the positive effects of vaccinations in some countries, adaptation to containment measures, and continued policy support. But just to be clear, we are still only in February, and there is tremendous uncertainty around this forecast, especially considering that we ended 2020 with a contraction of 3.5%, meaning the worst peacetime recession since the Great Depression. So how we fare over the next few months will be critical. Much of it will depend on the outcome of the race between the mutating virus and vaccines, and on the ability of countries to provide continued support until herd immunity is achieved and the recovery is fully underway. Which is why our immediate priority must be to bring the health crisis under control. The international community must act swiftly to ensure access to vaccines and medical treatments also for low and middle income countries. This will require ramping up production, bolstering funding for the COVAX facility, and the logistics of vaccine delivery. The health and economic arguments for this are overwhelming. We estimate that faster vaccinations would raise global income cumulatively by $9 trillion over 2020 to 2025, with benefits for all countries. And as we look towards recovery, we must consider the potential of lasting scars imposed by the pandemic. Such scars could emanate from interrupted schooling, dislocated workers, idle skills, investments on hold, and new technology on standby. And given the gravity of this crisis, our second priority must be to maintain economic lifelines and policy support in countries where the virus is surging. This will help protect households and prevent bankruptcies of otherwise viable firms, enabling a faster rebound once the constraints are lifted. In countries where fiscal space is limited, spending should be prioritized for health and transfers to the poor. And only when infections are durably declining and economic activity is normalizing should countries begin to gradually roll back these lifelines while still cushioning the impact on the most vulnerable. Advanced economies with more fiscal space are, of course, expected to recover faster. But around half of all emerging markets and developing economies who were previously converging with advanced economies in per capita income are now expected to diverge, which is why our third priority must be to reverse these dangerous diversions between rich and poor countries by providing grants, highly concessional loans, and debt relief, including, in some cases, to address unsustainable sovereign debt that may come up in the period ahead. And as we take steps to navigate our way out of this unprecedented crisis, we also have a once-in-a-lifetime opportunity. An opportunity to put in place policies that not only strengthen our recovery in the short term, but ensure that we build a solid foundation for a more sustainable, inclusive economy in the years ahead. Simply returning to the low growth, low inequality, high inequality economy of the past is no longer an option. And which is why the IMF is calling for a synchronized investment in green and digital infrastructure as the pandemic starts to come under control. Governments must put in place public investments, as well as incentives for private investments that support low carbon and climate resilient growth. These could be efficient mass transit systems, smart electricity grids, or phasing out harmful fuel subsidies. The IMF estimates that a combination of green investments and appropriate carbon pricing can put us on a path toward net zero emissions by mid-century and help create millions of new jobs. Similarly, we know that the economy of the future will be digital. Each of you know this especially well. So countries must enable a planned transition by investing in digital infrastructure, be it e-commerce, e-learning, e-government, or digital money and payments. But of course, green and digital investment must also include support for workers as they transition from shrinking to expanding sectors. Increased investment in training, reskilling, and high-quality education will be pivotal to unlocking the potential of a green and digital economy. Already widely understood, this is nonetheless an important point needing greater attention than it has received in the past. And at the IMF, we are moving fast in both of these areas. We are incorporating climate change into our country and financial risk assessments. And we are scaling up capacity development in this area. We are also working with countries on policies that enable the new digital paradigm to become an engine of growth and financial inclusion. So let me now conclude by saying this. 2021 will be the most consequential year of our lifetimes. If the international community can come together to help each other get to the other side of the pandemic, we can exit the crisis with minimal economic scarring. And if we begin to sow the right seeds of investments and policies today, we can go even further and build the foundation of a 21st century economy, one that each of you will inherit. I hope we can count on your support to do this, and I thank you very much for your attention.
Well, excellent. Thank you very much for that. And hello, nice to meet you. Sorry I couldn't join you right at the very beginning. But yeah,
nice to meet you, Izzy.
It was excellent to hear about what the IMF is doing and highlighting some of the areas that need more attention going forward. It's really a unique privilege to get an expert's perspective in this rather than just reading everything in the media. So thank you very much. So now we'll move on with the Q&A section of this. We've had some pre-selected questions from our audience around the world. So let's dive right in. Our first question, I don't know, I wouldn't call it an easy one. Let's see. So IMF bailouts have been criticized as not truly addressing the root cause of a country's balance of payment problems and instead becoming a tool countries use to pay off international bank loans. So what do you think is what long-term effect does an IMF bailout really have?
A very good question, a question often posed, and when it's posed sometimes one thinks of what some would call, and some at the IMF and myself still call, one's grandmother's or grandfather's IMF. And I think in that context, good to start responding to the question by giving some context of the IMF's lending. And the IMF, of course, is an organization of 190 member countries focused on cooperation, monetary cooperation, and ensuring financial stability. And we of course have a pool of resources made possible by our member countries' contributions to our institution. And when one member country is in financial need, because as possibly of shocks that were completely unanticipated, like the one we're experiencing today, or bad policies in some places that need to be changed, when countries no longer have access to other sources of financing, or when those other sources of financing are so expensive that they're completely unaffordable, they come to the IMF. And the pool we have then enables them to borrow and to then go about putting in place those changes in policies that are needed to correct the problems that led to their financial stress. So that's how the fund goes about helping our membership when they're in difficulties. Now, making those resources available elicits, gives an opportunity, a breathing space for countries to then work on the policies they need to work on. It also catalyzes additional financing where they can then roll over some of their debt and continue to draw on new, more affordable debt. And it's important to also say that, of course, all of these programs one talks about are fund-supported programs, not IMF programs. They are programs that countries, can best take forward. So we build these IMF-supported programs around countries' own commitments they make on the basis of their own homegrown strategy for growth and for development, and those serve then to assess how countries are doing in putting in place the measures they need to do to correct imbalances that have been created. So that's how we work with our member countries. We give them an opportunity to get that breathing space. We give them an opportunity to get new financing. Some of that financing is rolled over, and they're able then to correct and to take forward their programs that will now help them achieve their objectives. So that's in fact how we work. There are cases in which, of course, countries' debts are unsustainable, and in that context have to be reprofiled. They need debt relief to be able to get that breathing space. They may, in some cases, need debt restructuring because the debt is not at all sustainable. So let me stop there, and maybe we go on to some of the other very good questions I'm sure you have for me.
Yeah, great. Well, thank you very much for that. That was a very clear explanation. Thank you. So now we have two questions on the matter of loans. So if I just go with the first one.
Okay.
So IMF loans have often been conditional on structural adjustment. If we consider, for example, strict austerity measures in Greece and other instances like that. So while fixing the balance of payment crisis, this leads to negative social impacts. Is this a policy that the IMF can continue to justify?
Okay, we were just talking about the context for our lending and how we go about providing that those resources and breathing space to countries. And the conditions you mentioned are indeed those commitments that governments take, and around which we build a fund-supported program. So our disbursements to countries under those programs are then done when a country has met that commitment made. And in our long history with lending to our member countries, we know that programs are most successful when they're fully owned by country authorities, and where there's been a good effort to build domestic consensus around the very difficult things that need to be done sometimes to help countries emerge from the difficulties they're in. So that's what, those commitments are called conditionality. And the conditionality is necessary both to help the country begin on the path to addressing in a sustained way those policies that did not permit it to do better, or to respond to those external shocks that may have brought it to needing fund support. But those commitments also make it give confidence to the fund being able to then expect repayments on the loans that it has granted. And those loans, of course, and the resources supporting those loans, as I said when I began the first question, are resources of our 190 member countries. And they will go in and out needing support for the fund. And it is therefore in that context important that countries that do borrow repay the IMF so that others who may need it later on are able to draw on those resources. So conditionality has two objectives, both first to, of course, help countries to really correct the problems, and second, to make sure they can then repay the loans so that other countries are able to to benefit from the resources that the fund provides. Now, adjustments are always necessary, usually necessary to programs when countries are confronted with financial crises. And those adjustments can of course elicit that breathing space I talked about before, provide more catalytic funding from other donors who often looked to the existence of an IMF program as a signal and some assurance that macroeconomic policies will be focused on correcting past mistakes or responding to shocks. So that's the role of conditionality. They will differ in individual country circumstances. It will be country specific because countries are different. And so one has to do a proper job of ascertaining why an individual country came to its problem. In some countries, there may be a huge issue around the lack of domestic revenues that are way below where they should be, either because people are circumventing the tax laws, or because the capacity of an individual country is not enough to ensure collection of existing tax laws. So, you know, and in other countries, they may be because expenditure on the spending side is not the best. It's not high quality expenditure, and in that way, it takes away room from more high return expenditures. And so streamlining of those inefficient expenditures is necessary. In some other countries, they may be because the legal framework does not make for sound management of public finances. So it may be in the expenditure approval process that changes need to be made. So it will differ from country to country. It may be in some countries because they need some support in terms of the central bank's capacity to manage and to manage in a way that contains inflation, a variety of things in the macro front, and tailored to individual country circumstances. That is when conditionality is most effective.
Yeah, so there's no sort of universal factors of consideration that help finalize the conditions of a loan. In that case, is very much unique to individual nations.
That's right. That's right.
Okay. So our next question, does lending to countries with less than honest leaders really have an impact, or is it, at least in part, wasted money?
Well, it's quite an important question, because the fund takes very, very seriously the issues of accountability, transparency in managing public resources. And it is a key feature of what elements we look at in making decisions about whether to proceed with a loan or not. And in making that decision, the fund, of course, has to bear in mind also the consequences of a country not being able to count on fund financing at all, and what that means for its population. So many things to balance when we're with our 190 member countries on our board making a decision about whether to proceed with the loan. But in the preparatory work to actually disbursing from approving those loans and disbursing from them, we typically do a full safeguards assessment, as we call it, of central banks to make sure that resources channeled to them will be spent on the agreed purposes and will help them to achieve the objectives being pursued. And when those resources are used as budget support, that is, they go in and finance a government's budget, we do an additional fiscal assessment as well, to a fiscal safeguards assessment to make sure that the expenditure framework, the budgetary system allows traceability, accountability, and transparency around spending. So those are requirements we have for our lending that then help us to support the work of people in various countries seeking to make their governments accountable. And in addition to that, we also have specific conditions, as we discussed before, that are sometimes necessary in the area of anti-corruption, anti-money laundering, and legal frameworks that facilitate more transparency and mitigation of risk from corruption and reduction in corruption. So very, very much a focus of our fund-supported programs. And in the context we're now in the pandemic, of course, we've made available large volumes of resources, as I said in my opening remarks, to countries in the form of emergency financing. And emergency financing with no conditionality, no ex post conditionality, but a commitment that governments make when they take out that financing to have their spending tracked, to have procurement contracts used for that for that spending, also published, and to have audits after the budget year ends to ensure that there's accountability for how those resources were spent. So those are commitments that governments have made in receiving emergency financing from the IMF as well.
Excellent, thank you. And I'm sure there's a whole process in ensuring transparency with situations like those as well. Brilliant answer, thank you very much. So we also, obviously, we talk a lot about the privilege of the global north. So one of our attendees was wondering, does the global south suffer from a lack of representation and power in international institutions like the IMF?
Well, unlike the UN, that has a governance structure of one country, one vote, the fund's governance system is based on what we call our quotas. And quotas are established on the basis of each country's relative significance in the international economy, relative size, its position and relative interconnectedness. So the size of an economy has a large bearing on its quota, and so its quota share. And the quota share, in turn, also informs representation, how a country is represented in the fund, its voting share, and also how much it is expected to contribute to fund resources, how much it can borrow from fund resources. But of course, quotas are revisited and reviewed on a regular basis at the fund to take on board changes in the global economy and in countries' position in the global economy, so that quota shares can change. And we're now at a point where among our 10 largest shareholders are the BRIC countries, so Brazil, Russia, India, and China, among the 10 largest shareholders in the IMF, a situation that's very different than what it looked like some decades ago. So we are regularly looking at the evolution of economies and reviewing our quota shares in that connection. And as a result, we're having a stronger representation of what you have called the Global South on our board, and improving our governance in that regard.
Excellent. So then we can hopefully hope for progress going forward then.
Yes, we're going to be starting another review of our quota, our 16th quota review later this year. And so we expect that there will likely be changes coming out of that as well.
Great. Then, it would be remiss of us not to have a question about the pandemic. So someone has asked if the IMF will be relaxing the terms of its conditional loans, especially to developing nations, given the pandemic, given the crisis.
Very, very relevant, a very good question. You know, I talked about emergency financing before and the large volumes of emergency financing we've done. Of the 85 loans we've approved that made possible the disbursement of those emergency resources, 80 of those were actually without conditionality at all, because they came from an instrument, two instruments we use when countries are faced with an emergency, and those have no ex post conditionality, as I said before. So that's a recognition, of course, of countries being amidst a pandemic, a crisis like no other, a huge shock, that where responding to that shock has to be focused first and foremost on saving lives, and with health, with focus on the health needs to do that, and saving livelihoods because so many people have lost their jobs. So the focus of emergency financing has to be very narrow, focused on minimum basic stability, macro stability, and saving lives and livelihoods. Of course, we're also going to be moving back towards more non-emergency financing, if I could call it that, financing that is subject to conditionality. But in that context, we're also looking at making sure that that conditionality becomes very focused, because we're still very much amidst a very uncertain world, where countries, of course, have to continue to focus on dealing with the pandemic now, but where it may also be possible to start addressing some issues that will position them better to exit the crisis. So tailored and limited structural and other conditionality in these programs will be important in that regard. And some innovation and some new ways of thinking in terms of how we approach the monitoring of that conditionality. Do we look at every particular structural reform that was part of the commitments government made? Or do we look at the totality of all that has been done and establish that that is adequate? Not every single issue has to, or thing has to have been done and met, because there are competing pressures on governments at this point in time. And as long as countries are moving in the right direction of correcting those imbalances, is it enough to then disperse our resources? So that sort of thinking, of course, we have to continue to bring to bear amidst a very uncertain set of circumstances countries are dealing with. So conditionality, indeed, more tailored, and as I said before, of course, it has to be more tailored to individual country circumstances. Some issues are more important in one country than the other, but it is not a whole gamut of a laundry list that countries should be paying attention to at this point in time.
Brilliant. Yeah, so another case of there being no blanket scheme for everyone, and the idea that any progress is good progress, I suppose.
One has to, of course, have some ambition about what wants to do, because countries don't want to continue to be, subject to a program, that they feel is not, they're not fully in control of. They want to of course, use the fund-supported program to help them to exit a crisis. And so the more one can work diligently towards the objectives, and the more one owns those objectives, the greater the likelihood that will be a shorter time frame. Yeah.
Excellent, thank you. And then if we go to our next, we've got a few minutes left. So how would you address and deal with the issues regarding the current multilateral debt areas of several countries within sub-Saharan Africa?
Yeah, very, very important question. Arrears to multilateral institutions like the IMF or the World Bank or the African Development Bank are very important in a number of countries. when countries have those arrears, it means that they cannot draw on the financing that would normally be possible from those institutions. And as a result, a focus has to be first on clearing those arrears. And given how poor these countries are and how needy they are, that has to have strong support from the international community. And when you look at the situation of a country like Somalia, that last year early last year, was able to clear its arrears finally to the international financial institutions and start on the path of debt relief. That was made possible by a huge generosity on the part of IMF member countries all across the board, not well-off African IMF member countries, but also less well-off, making a donation to Somalia to enable it to exit this very difficult period where it could not borrow anything at all because it was in arrears to the fund. So that's the first thing that needs to be done. But of course, I want to also speak to the issue of the debt issue more generally, because even before the crisis, we unfortunately had a situation where a significant number of low-income countries, including sub-Saharan African countries, were at high risk of debt distress, so very much in need of managing their debt levels with a view to not getting to a point where they start accumulating arrears to all their creditors and then cannot draw on new resources to finance their development. So, and unfortunately, also, the shocks from this pandemic, not just the pandemic itself, but the commodity price shocks and other shocks, the shock to tourism that some countries are dealing with because they're tourist-based economies, mean that their revenues have imploded, some of them, and that they really, they have increased spending needs to deal with the pandemic, but their revenues have imploded. Their debt levels increase further. So clearly that has to be addressed. And in the context of efforts taken last year by the international community, the debt service suspension initiative that the G20 countries put into place at the urging of the IMF and the World Bank, that initiative has helped countries make the fiscal space to finance some of these urgent needs to respond to the pandemic. And 60% of the countries that are eligible, and those are the poorest countries, have actually requested that relief, and that has helped them to respond to the crisis. But the DSSI, as helpful as it has been, is not enough for countries that have unsustainable debts. And so a second initiative that the G20 put in place late last year was the common framework, as it's called, which gives a framework for dealing with unsustainable debt for countries. And the fund is going to be working very closely with country authorities and the G20 to make sure that that is helpful in debt restructuring that some countries may need.
Brilliant, thank you very much for that. And we still have some time left, and I'm sure everyone would love to know a bit more about you yourself before we do end. So how did your work as a civil servant in Liberia's Ministry of Finances differ to the tasks that were relevant to your several senior positions at the World Bank and the IMF?
Yeah, no, thank you for that question and the opportunity to reflect a little on my career. But you know, I was hugely privileged to have been Liberia's Minister of Finance just after the long and brutal civil war we had, and working with President Sirleaf to start to you know, get our country back in the international community, deal with this long-standing, very large stock of external arrears, and in that way facilitate debt relief and the ability to draw on new resources. We're just talking about that. And Liberia is one of those cases that had long protracted arrears to all of the international financial institutions as a result of the war. So I was very privileged to have that opportunity to contribute. And likewise, I've been very privileged and honored to have had an opportunity to contribute in my professional life at the World Bank and at the IMF. And all of those experiences for me have been mutually reinforcing. And I've been helped from one to another. And when I've gone back, I've been helped the other way around. And at the bank, I had a 17-year career at the bank where I was working on Africa, South Asia, corporate issues with senior management in different roles in my career at the bank. And often on the other side of the table, listening to countries and hearing about their commitments to their reform programs and discussing with them how they take them forward. And some of that time was spent being a bit anxious that things were not moving as fast as was from the perspective of a staff within the bank, the best way to proceed and to address those reform programs reform efforts, put them in place as quickly as possible. So there was sometimes that frustration that things were moving too slowly. But there were times also when countries really led the way and they knew what they wanted. They told the bank what they wanted to do. They challenged the bank to challenge them even more. And with those member countries, of course, one could then be a champion for them within the bank and really push for the bank to respond even more to their needs. And so from that, I took away the lesson, of course, that it is impossible to get durable results from any of these reform programs of countries without that strong ownership and without the vision that the country has of what it wants to achieve. And knowing that actually gave me a very good place to then return a good lesson to take back to Liberia. And then, recognizing, of course, the political economy constraints, all of the issues that sometimes impeded quicker reform. In Liberia itself, of course, we were faced with no capacity whatsoever, practically no electricity, no, everything was no at the time coming right after the war. But what was not no for us was a focus and a focus on really wanting to change course for our country and to work with our international partners in that respect. And it was in that context that I saw for myself from that side of the table, the work of the World Bank and the IMF. And certainly the fund was a critical partner in helping us to make progress towards clearing our arrears. And some of that support from the fund was very courageous in helping us to deal with some very difficult political economy issues where vested interests didn't want to let go of some things. The budgetary process in Liberia, for example, was something that the fund courageously helped us to address head on. And so from that frontline experience of being on that side of the table, I came to the IMF in my first role in 2008 as director of the African department, and was able to bring some of that frontline experience to really helping our countries deal with various shocks, the food and fuel crisis, the global financial crisis, all sorts of other shocks. And of course, now coming back to the fund in this role, also with all of that frontline experience has helped immensely in our task to really respond to an incredible crisis for our country. So I've been hugely privileged in having pieces of my career mutually reinforce each other and help to add value as I went along.
Well, brilliant. Thank you very much. It's very humbling for us to hear you talk about your experiences so humbly yourself as well. And thank you with regard to the earlier questions for answering so comprehensively for issues that are quite complex, it's nice to be able to understand them. So I really do appreciate that.
Thank you.
And it's been a pleasure hosting you.
I've appreciated the opportunity to engage with you and everybody on the call. Just a wonderful opportunity for us to explain our work. Yeah, thank
Brilliant.
you.
We really
Thank you
appreciate
so
it.
much.